Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome to Traders Corner. As always, I'm joined by Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, Julieta.
Garth, having been rather patient this year, you are trading with a vengeance this week, and we're going to talk about the 3 shares in which you've taken positions. But before we get there, as we do, we tend to set the scene with the top 40 index, which I think you'd like to bring up now.
Yeah, let's have a quick look at that. The top 40 index is up on the screen at the moment. And last week, we've alluded to the fact that we had this large head and shoulders pattern on the top 40 and that the market had broken down below the neckline of that pattern. But it had also, at that stage, broken back up above the neckline as well. And this head and shoulders pattern, it kind of remains valid whilst the market stays below the top of the right shoulder of that head and shoulders pattern. And it could potentially take us down, back down towards the December lows that we saw last year. The thing is that the market is holding up fairly well at the moment. And if we start to take out the top of that right shoulder of the head and shoulder structure, then this whole thing becomes invalid. So we're kind of at a critical junction at the moment where we might break higher or we might turn lower and then the head and shoulders are still valid. But it'll be very interesting to see. And in this kind of maybe not knife edge type of scenario, it's difficult to know one way or the other whether, do we have a long bias or do we have a short bias? And we've actually done 3 trades this week. 2 of them are shorts and 1 of them is a long. So we're kind of looking at the chart setups in their own individual right and trading them accordingly.
Yeah. So you've kind of covered all bases by going long and short of the market. But let's have a look at those individual trades, Garth. And the first one is Sasol, which you did mention last week. That you would look to potentially short, and so it has come to pass. And you've got a chart there of the Brent crude oil price.
Yes, that's right. The first chart, the first stock that we're shorting is Sasol, and the second stock that we're shorting is MTN. And we'll talk about each of those, but both of them are, the trades kind of revolve around the backdrop of a weak Brent crude oil price.
Okay.
And I'll explain why in both cases. So there's the chart of the Brent crude oil price, and I did allude to this last week as well, and I said that the price of oil had broken below this uptrend, which goes back to the beginning of January 2015, and that was a bearish break. We had also seen the oil price breaking down below the bottom of this triangle pattern, or flat-sided triangle pattern. Now that to me is quite a bearish setup, and it probably brings into play the March low at $53 a barrel, and quite feasibly even the January low at $47 a barrel. And I think that the oil price will continue to be weak and continue to have downside, based on that technical structure. And also, obviously, this break has come around on the fact that a deal has been struck with Iran regarding their nuclear program, and there will be lifting of sanctions on oil exports from Iran. And that's going to serve to add additional supply into an oil market that's already oversupplied. So in terms of the 2 stocks that we're looking at, the first one is Sasol. And obviously Sasol and its relationship with the oil price doesn't need much explanation, obviously being a big oil producer. Now, I did highlight this chart last week as well, and I said that I would be watching the chart of Sasol during the week for a potential short situation. And I think we've got that on our hands now. You can see that the price of Sasol has broken down below the uptrend that started in January of this year, similar to what we saw on the oil price. It has also retraced back up, and it's now what was previously support in the form of that uptrend is now acting as resistance on the rally back up now. And there's also obviously a downtrend that comes through from the recent highs since April. And what that means is that there's resistance in this area around about 435 to 440 Rand per share on Sasol. And based on that, we have actually seen a reversal in the price of Sasol recently. We saw what's called a bearish engulfing candle on Friday. And I've gone short of Sasol based on that, and I've gone short at 435 Rand. And I've put the stop loss fairly wide at 451 Rand in this case, just because I'm a bit worried about any noise around this resistance area. And I want to try and put that stop loss far enough out of the way so that we don't get stopped out unnecessarily.
Yeah, because it is really irritating to get stopped out and then the trade works out.
Exactly.
So, and you manually control your stop losses, so you don't feel that you could get exposed too much by setting that stop loss that wide.
No, I don't think so. Look, if the price of Sasol starts to move down nicely from these levels, then I'll probably tighten that stop loss a bit. But for the moment, in terms of our initial trade, I'd rather set the stop loss wide because, as you said, nothing more irritating than you do a trade and it's right, but you end up being stopped out unnecessarily because of a bit of volatility.
Yeah. Okay, guys. So you have taken that short position in Greater Mechanics. If you could look at that trade.
Yeah. So we've gone short at 435 rand. That stop loss is at 451 rand, as I mentioned. The risk per share, therefore, is 16 rand per share. I'm risking only 1% of our capital on this trade. And because we're doing 3 trades this week, my risk on all of them is actually fairly small. We've got about 334,000 rand at our disposal. So around about 3,400 rand would be 1% of that trading capital. And if I take the capital risk and I divide it by the risk per share, that means I can effectively trade 208 shares short. So I've rounded it down to 200 CFDs for our portfolio, and that's what I've gone short of. I'm looking at a target here of about 400 rand for Sasol. I think it's feasible that the price goes back down there if my bearish situation is right. And that gives us then a risk-to-reward ratio of 1 to 2.19. So a reasonable risk-reward ratio on this setup, I think.
Yeah. Okay, so Sasol is the first of the short positions that you've taken. As you said, the next one is MTN. And it's been interesting to see how MTN didn't react to what you would have thought would be positive news as far as Iran is concerned, with the lifting of Iranian sanctions down the line, the fact that we'll be able to repatriate money, but it hasn't done anything.
No, it hasn't. And this is the interesting thing. I mean, you can look at the positive situation out of that deal in Iran, but the negative side of this is, again, coming back to the oil price. About 40% of MTN's earnings come out of Nigeria, and obviously Nigeria is a big oil exporter. When the oil price weakens, the Nigerian currency, the naira, tends to weaken with it. And when you translate a weaker naira earnings back into rands, it actually negatively affects MTN's earnings. So I think with the oil price being weak and looking vulnerable to further weakness, that probably is a net negative for MTN. And certainly the way the share price has behaved recently, it would indicate that the market is seeing this in a slightly negative light. For me, what's quite interesting to note regarding MTN here is that the stock has come down quite sharply, and it's been consolidating into a little triangle type of pattern, where you can maybe call that a pennant over the last two weeks or so. And that's come about at a time when the overall market has rallied by 3,600 points. And during that time, MTN has managed to go precisely nowhere. So that to me indicates that there's underlying weakness in the share price of MTN. And there's a possibility that this is a continuation triangle, and that the likelihood is that we're going to see a break to the downside here. And certainly, if I think that our overall market's a little stretched and it could come back a bit, a weak stock like MTN could probably come under pressure in the event that the broader market pulls back. So with that being the case, I think a breakdown below the bottom of that triangle structure in MTN opens a target initially to 210 Rand, and then potentially back down to about 200 Rand a share. So on this basis, I'm going short of MTN. I've put a short on at 217 Rand per share, and my stop loss is 221 Rand.
Okay.
That stop loss would only trigger in the event that we see that triangle structure breaking to the upside. Now, because I think that it's a continuation pattern, the likelihood, I think, is that we break to the downside here.
Okay, so in Greater Mechanics then?
All right, so we're shorting at 217 Rand. We've got a stop loss at 221. My risk per share, therefore, is 4 Rand per share. Again, I'm risking 1% of our capital, and that means that we've got 3,340 Rand at risk. 3,340 Rand divided by the 4 Rand per share, risk per share, leaves me with 835 shares. So I've rounded that down to do 800 CFDs for our portfolio. The target here is 210 Rand and then potentially 200 Rand, which gives us a risk-to-reward ratio of up to 1 to 4.
Which is quite chunky.
Well, it is quite chunky, but it might not be as good as that when the trade finishes out, but that's potentially the upside that we might see for ourselves.
Okay, so 2 short positions. It's not often that you go short. Well, in fact, you've been going short more often, which is interesting, and I guess maybe plays to this market this year. The next one is a long position, and it's quite an interesting one that you've gone long of, because it's kind of the most unloved share on the JSE. And just yesterday, I was talking to someone who was going short of Kumba iron ore.
Yeah, so Kumba, we're going long of, and I know this is probably quite a controversial call, but I'll explain why. And I think this is a case where I want to educate the viewers about thinking like a trader and avoiding doing what is perceived to often be the obvious trade, because often the obvious trade is not the right trade. There's the chart of Kumba. No doubt it's in a relatively steady downtrend. It has been for a long time, and it's still in a downtrend at the moment. If we take that daily chart and we actually now zoom in on an intraday chart, so this is now a 15-minute chart of Kumba. Okay. So very short term. We've only got a couple of days worth of trading activity here. But now what is very interesting is today's trading activity exhibited a big gap down at the start of trade. And the reason for that was that Kumba came out with results which were disappointing. The company indicated that they're not going to pay a dividend with this set of earnings, which is quite negative because Kumba's always been a big dividend payer.
And it's one of the reasons why people buy Kumba.
It certainly is. The dividend yield has always been a big attraction. So now they've scrapped the dividend. Okay. But the thing is that Kumba is one of the most shorted shares on the JSE. It's one of the top 10 shorted stocks on the JSE. It is relatively tightly held by virtue of its holding company, Anglo American. And the thing about a stock that is tightly held and has a lot of short interest in it is that it has the propensity to have massive short squeezes. Now, in my opinion, the short positions that have been held in the stock would have been entered on the premise that these results were going to be disappointing and that it's generally a bit of a bleak outlook. The thing is that now this is known. We know the results. We know the dividend has been cut. The iron ore price is weak, et cetera, but these results also now set the base very, very low for the next round of earnings. And in all honesty, I think that all the bad news is probably factored into the price now. So the share price did gap down at the open this morning, but very quickly there was buying interest, and that to me started to indicate that there was likely to be, or that there was short covering coming in to take the share price higher. So I went long based on that this morning, and to be honest, I did a little bit of bottom picking here, but it was such a small position that I didn't feel I was being too naughty by doing that. I went long at 117 Rand 20, and very quickly we saw other buyers coming in and taking the stock higher. So I've put a stop loss at 115, and my feeling is that the shorts are probably likely to cover this stock in the weeks ahead, and there might even be a little bit of natural buying coming in because, as I said, this is now such a marginal stock. The base has been set very, very low in terms of the earnings. Any small or slight increase in iron ore prices from current levels could probably have quite a meaningful positive impact on the next set of earnings for Kumba. So I don't think you want to be short this stock now. In fact, I think the propensity is that we might find a very aggressive round of short covering coming in to take this price higher.
Okay, so in greater detail, because you talked about naughty bottom picking. Why is that naughty? I mean, surely this is what you want to do as a trader.
Well, yeah, look, we promote proper trading principles on this show, and bottom picking is generally not a good habit. Okay. But I think there's also a case to be made for if you're going to break the rules, know when to do it, know how to do it. And I think in a case like this, as I've explained, there's quite good thinking, or at least I think it's quite sound thinking, behind why I believe this share price should move higher from these levels.
Okay. Garth, so then just to wrap up that trade and show it as you always do in greater detail.
Yeah, so we've gone long at 117.20. My stop loss is at 115 Rand. The risk per share, therefore, is 2.20 Rand per share. I'm risking only 1,000 Rand of our capital. It's a tiny risk, 0.3% of our capital.
So you're not betting the farm in this trade?
Most definitely not. Most definitely not. Obviously, I'm breaking rules and I'm bottom picking and whatever. So when you're going to do that, if you're going to break the rules, know that you're doing it and do it properly and don't take a big risk. Okay. All right, and that's exactly what we're doing here. If I risk 1,000 Rand and I divide that by 2.20 Rand per share, that gives me 454 shares, so rounding it down to 450 CFDs. The target is 145 Rand.
Huh, okay, so that is quite a big jump that you're aiming for.
It's big, and the thing is, this is the sweetener. Look at that risk-to-reward ratio, that potential risk-to-reward ratio, 1 to 12. If I get that right, our 0.3% capital risk could still translate into actually quite a meaningful gain for our portfolio here. So let's see how it plays out, but I think this could be quite an interesting setup.
Okay, well, so lots to chew over, and if you want to watch the video again, obviously we'll have repeats and it'll be on our website. Garth, so to then end off, what does the portfolio look like?
All right, so we're similar levels to last week. We've got just short of 334,000 Rand in our portfolio. It's up 33.5% for the year to date. There you can see all the positions that we have open, our put spread, and then Sasol, MTN, and Kumba, which we've traded this week.
And very quickly, 10 seconds, your next courses.
All right, I'm in Cape Town, 15th of August, and in Bloemfontein, 21st and 22nd of August for courses. If you'd like to attend, email me, garth@traderscorner.co.za, and I'll send you all the info.
Okay, great. Garth, we'll leave it there. Thanks as always for joining us. Garth McKenzie is obviously founder and editor of Traders Corner.
Traders Corner was proudly brought to you by IG. Visit igmarkets.co.za to open a trading account today.